this is what they get right here. Okay, is this loan application to sign. Okay, and in our business, it's extremely important that when you send this out to the customer, that you as the loan officer discuss this package with them.
Okay.
And go over everything with them to make sure they understand it. Because if you do not do this, you'll most likely lose the loan.
Can I get my notepad real
Yeah,
quick?
sure.
That's exactly what happened with that loan.
With him?
No, Marcotte.
Oh yeah. That's right. You're right. That's a great example. You're right about that. So, in fact, this loan right here. Can I tell you something? This loan right here. The other lender sent this package to his customer to sign, and never called them to go over it. Okay, and then when the customer freaked out when they saw all this shit, and the lender didn't want to answer the phone. Okay, and so she canceled the loan, and now the loan is with us. Okay, so this is the same thing. Like you didn't call the customer to go over their documents, Wilfredo, and then she got upset. You understand why it's so important? You have to explain this to the customer.
Excellent. Every time we send it, I need to see it before
Yes,
she get it.
yes, because you cannot let the LOA.
I didn't know. Well, I did know because you told us that every time.
Every time, listen, you can't say I don't know. I don't know. Everything here for you in this job is available for you.
I know.
Okay.
No, you always tell us that. You
yeah,
always tell us
but
that.
whether you want to learn it or not is another thing. But it's always been here for you, and so. But the thing is that I'm recording this. I'm going to put it on the stream because I want you guys to make sure that we get it right. So anyway, so we're going to go over the documents today, and there's some questions that my customer Jason is going to ask me today. There's typical questions that the customer always asks. It's always the same questions. Okay, and he has those questions, and he's going to ask me, and you're going to need to know how to respond to them. If you choke, if you say I don't know, you're going to lose the loan. Right? That's how it works. Because you're the professional, and so you're going to call the customer, and I make this very simple, guys. I don't make this like rocket science with them. I don't go over all this crap with them. I have better things to do. So I will go over the main things with them, and so I'll tell them, look, here's where we're at, guys. So we prepared the loan package. And we're going to send it out to you to sign. It's an e-sign. There's 2 sets of documents you're going to sign. You have your wet signatures that you have to actually hand sign, because there's some disclosures that you actually have to sign, and the rest you can docu-sign on the computer. So this is just an application, guys. This is not a contract. You're not locked into anything. This is only an application for underwriting. Okay, these terms are not binding or final. Okay, so it's very important that you tell them that. Because if they think it's a contract, or they're locked in, or that they see all these things with several $100,000 in interest charges, it's going to scare them. Okay, so you let them know that it's not binding, it's not a contract, and then they say, here's what we're looking at. So you got this email, has all this information, and basically, this right here this is showing you the available loan programs and different things like that, and you just sign and you date it. It's nothing out of the norm. It's nothing that pertains to you specifically. It's just the available loan programs page. Okay, and that's what it looks like. This is your application, and just a summary of what we talked about. That has your name, your address, where you lived, how long you've worked there. Can you just check and make sure all that information is correct for me? Okay, great. You see it right there. It says that your interest rate's at 3.625. You see it right there. That's where showing you your interest rate is. And that's how much you're financing right there. So that shows it right there. That's your actual interest rate and how much you're financing. Okay? So that's your employment and your income. And you see all that right there. That's another part of the application. So this is just all part of your assets and liabilities. These are the questions that you've answered on the declarations, and that all looks fine. So that's good. So here we go to the loan estimate. This is the important page right here for you guys to take a look at. So this is called the loan estimate. And on the top it shows that it's a 30-year fixed mortgage, that you've selected a conventional loan, that the rate is not locked right now, and that you're going to be financing $199,500. Your interest rate's at 3.625%. And it's telling you right there to the right, can this increase after closing? And the answer is no. But the interest rate is not locked right now. This is only an estimate for the rate. Now, once you sign this and we get things moving, then we can lock the interest rate for you, but we can only lock the rate for 30 days, so we have to close quickly. That's showing how much your monthly payment is. It's $909.82. Your loan does not have a prepayment penalty, as it says right there. There's no balloon. And then below that, under the projected payments, it's showing what your total projected payment is with your taxes and insurance and everything included. Okay? And that escrow of $775 includes taxes, insurance, and the mortgage insurance we have estimated at $68. And then here, this big number right here, I don't get freaked out by this, but it shows that your estimated cash to close is $12,842, and the total closing costs are $9,500, $9,507. Now, I know that that's all lumped together, and that's including the seller's closing cost and everything that's going to be rolled in. And so I'll break this down for you on the next page and explain to you how we're coming up with these numbers. So just bear with me as I go through this with you. So all right, so here's the breakdown of the closing cost details. So you see here on the top that the origination charges are $29.85, and that's for the admin fee, the processing fee, the underwriting fee. To the right of that, you have your taxes and your title and government fees, your homeowner's insurance policy. Now, when you buy a home, you actually have to escrow 15 months of homeowner's insurance and 3 months of taxes. So those are called prepaids. So right there under prepaids, you see 12 months of insurance, and we're also down below that, you see the 3 months for the property taxes. So that right there is encompassing your escrow account setup. And so if you're not familiar with what an escrow account setup is, that's when you buy a home, you pay property taxes and insurance. And in the beginning, when you purchase a home, you have to fund that account with 3 months of prepaids of taxes and 15 months of insurance. And so that's where the lender or the servicer is managing the bill pay for your property taxes and your insurance. Every year they cut a check to the tax assessor and to your insurance company, and they want to have a cushion in there for reserves. So as we go down further, you see the title insurance, and you go down here to the rest of the number C, the endorsement fee, the lender's title insurance, the settlement fee, the tax certification fee. That's all part of the title fees, okay? So the total comes out to, with everything included, is $9,507. You're putting down $10,500. You've deposited $2,500 on the earnest money contract. So what's due to closing for you, now you got a credit. This loan came with a credit, and so let me explain to you what that means. So the seller is giving a credit of $2,465 for closing, and that's what they're concessing for closing costs. Now the other credits of $2,200 is the credits that we're giving you. We're giving you a lender credit to help to pay for the closing cost. And so for this program, you're getting a $2,200 lender credit, which is something that we're giving to you as a lender rebate. Kind of like when you buy a car and you get a lender auto rebate from Ford or Chevy. Well, us as the Bank of England, we give you a lender rebate of $2,200. That reduces your cash to close. So before you would have had to bring $14,800 to close. Now you only have to bring $12,842 because of the lender credit that we gave you. So that's your net amount that's due to closing. So basically, that's how the breakdown of the closing cost details. Now, right here is more information about the loan. It shows you in 5 years how much you'd pay in principal and interest, and how much you'd pay down in principal. This is the APR. Everybody asks this question right here. Hey, Jason, why does my APR show 4.035%? I thought you were charging me 3.625%. What's up, man? Are you ripping me off? What's the difference? What's APR? What's interest rate? Because over here, you told me that the rate was 3.625. Why does this say 4.035? What are you trying to do to me? And so I'm not trying to do anything to you. Let me explain to you how it works so you can understand. So when you get a loan, whether it's a car loan, whether it's a credit card, whether you get a mortgage, you have your interest rate that you pay the loan on. Okay, and then you have your APR. This is not your interest rate. See, look what it says right there, guys. This is not your interest rate. That's not your rate. Okay, that's the cost of credit over the life of the loan. And that's with all your closing costs included. All right? And so if your actual interest rate was 4.035%, your payment wouldn't be $1,753. It'd be $1,890. So basically, that's not your payment. Your payment is $1,753. So I want to make sure you understand that the APR is not your rate, and you're going to be at the 3.625 rate that I'm going to lock in for you. But don't worry, everyone asks that question. You don't have to think that you're being, you're paying 4.035%. You're getting the lower rate like I told you. Now here's another question I want to tell you right here. See down here where it says servicing? Remember when I told you that we service our loans? Well, we do, but there's some loans that we do not service. And so because there's some loans that we do not service, we have to check on the box that says that your loan may be transferred to a certain servicer. So we work with Chase, we work with Wells Fargo. Is there any of those banks that you like? Because we can request that your loan get serviced with them, and for whatever reason, that they become one of your servicers. So you like Chase? Okay, no problem. We'll make sure that we'll put in a request that your loan goes to Chase. Is that fine? Okay, good. So yeah, I know that we said that we service our loans, and we do, but because there's some programs that we don't service, like lower credit score loans or portfolio loans, then we have other servicers that we use, and I'm not saying that you're gonna that your loan's gonna get serviced by one of them. It's just that it may. And so, but I have to let you know that. And so if there's any preference, anyone that you like to work with, then please let me know if you like Chase or Wells Fargo. But that's what that means. I just want to explain that to you so you understand. This is just the acknowledgement of intent to proceed. This is saying that you acknowledge that you're working with Jason. This is an MLS number, and that you're going to be moving forward with the loan. Okay? So just sign and date that, please. Please put all the dates for the same. This right here is just the additional details. These are things that you can shop for. You could shop for, title company, the surveyor, pest inspection, septic. These are things that you have the right to shop for. These are all things that you can definitely check the pricing on with different vendors. So we already have a lot of these selected for you, but you have the right to shop for these. So just sign right there. Oh, there's nothing you have to sign on this one. I'm sorry. So let's see what else we got. This is a certificate of authorization. This authorizes us to, verify your credit, verify your employment with your employer, verify your information. You're giving us a release or authorization to go ahead and do this. This is if we were going to do a rescore on you. This gives us authorization to do a credit rescore on you. We didn't have to do that in your case, but if we did, then you'd have to sign that and give us authorization to do the rescore. So this is just a home ownership counseling. This doesn't apply to you. But if you needed, if you're doing like a first-time buyer course, then these are the different agencies that we work with that for the course that, for the first-time buyer program. And these are the different companies that we work with here. So, and you can work with any of them. In your case, it won't apply because we're not doing the first-time buyer program. And this is just saying that you're signing that we had disclosed this to you and that you had receipt of it. So this is a 4506T. This is for us to verify your tax returns. So when you're doing a home loan, customers give us you give us your tax returns to verify your income. Well, we have to go back to the IRS to check and make sure that the tax return you gave us matches the one that you file with the IRS. Because unfortunately, some customers, some people, they either make amendments or they change their tax returns, or sometimes they do things on their tax returns that they shouldn't. And so we have to make sure that whatever you've given us is also given to the IRS and it matches, because if it doesn't, then we have to go off the one that the IRS has. So just to let you know. So that's what that is. So this is a very important page right here. This says, what does the bank do with your personal information? Okay, we use it for our business. For marketing purposes, we'll send you an email. We do not sell your information to joint companies. We do not use it with affiliate companies. We will not allow any affiliate companies to market to you, so we will not share your information with them. Okay? We are the ones providing the notice. It tells you what Bank of England does and the federal laws that govern us and why we cannot share your information. Your information is on a secure server and protected. All of our lines and all of our internet is all on the secure server.
Hey, Alice. How you doing?
This is your credit score disclosure. This is the credit scores that we use to determine your loan program. It shows your credit scores here. That you had a credit score of 797, 790, and that was with the 797 was with Experian. The 790 right here was with Experian, and the TransUnion is with 800, and 785 for your husband, 792 for Equifax, and 790 for Equifax for your husband. So that's just a disclosure showing that we did pour your credit, and those are the scores that came back. This is hazard insurance authorization, saying that we require that you get homeowners insurance, and you get to choose which company you want. However, the maximum deductible may not exceed 5% of the insurance policy. So, but you get to choose any insurance company that you want to work with. Okay. So.
We gotta have legitimate ways of sourcing it. Okay.
This is a private mortgage insurance disclosure. Your loan does have mortgage insurance on it that insures the mortgage. You know what mortgage insurance is? Okay, let me explain to you what that is. So, in the event that you defaulted or went on a foreclosure, the lender would get paid off. So this is an insurance policy. Just like how you have car insurance, just like you have homeowners insurance. Well, the lender wants insurance on you because you're not putting 20% down. You have to pay mortgage insurance. Okay. And this is a disclosure saying that your loan has mortgage insurance on it. Now, when you hit 20% equity in your property, then we can remove the mortgage insurance. So that's what that's telling you. Okay. This is a disclosure notice showing that we did disclose all these items to you, and so you could just please sign there. This is under the Fair Credit Reporting Act and Equal Credit Opportunity Act that we did disclose all these documents to you tonight. I skipped one, sorry guys. That's just an extension of that page. This is just a counseling form saying that you were made aware of the different things as far as that are going to be required. Like, for one thing, any large deposits that appear in your checking account, we will have to source and season those deposits. This is not a loan commitment. This is not a final loan approval right now. This is only an application. This is explaining who we are and what we do, that we strive for excellence to help you in achieving your goals of home ownership, and a little bit about the bank. So, and this is basically a home loan toolkit. It's like a guide to buying a home. Very good information there. I encourage you to read it if you have time. Just step-by-step process on what it takes to buy a house. And basically, what I've explained to you tonight is in this booklet. So if you want to go through it, by all means go ahead. But there's nothing new or addition than what I've already went over with you. and explains the different things that we talked about tonight. So anyway, that's what it takes to review a loan package with a customer and make sure that they feel comfortable with everything. You go through things step by step, answer their questions. Those are the main things that everybody asks for when they're buying a house, is what's their payment, what's their cash to close, what's the difference between the APR and the and the interest rate. So just make people feel comfortable, answer their questions. Please go over this with them whenever they get their loan package. Okay?